Good morning, everybody. Hey, welcome to Friday, October 15th. I hope you guys had a great week. We are ending up strong, it looks like right now, in the marketplace. Yesterday was a great day on Wall Street. And this morning, the futures look like they're moving in the same direction. We'll talk about that and a little bit more when we connect up here with Scotty here in just a few minutes. But before we do that, let me just remind you that as we look at the ups and downs of the market, there's truly only one thing any of us can control when it comes to the market, and that's how much risk you have. And if you don't know what your risk number is, that can be problematic as we continue to move closer and closer to retirement. Give us a call at 863-382-0037 to find out your risk score and to walk through our core retirement design. And with that, we've got Scotty joining us up right now.
One of the songs ever recorded. There's the great Tom Schultz in Boston, More Than a Feeling. And hey, you're welcome. It's 8:39. Let's see what Phillip's up to. Let's go to Statler Financial Services in Sebring. Good morning, Phillip. How you doing?
Good morning, Scotty. Hey, doing well. I know you had to get up a little early this morning to fill in for Dave. I know he really appreciated that.
I know he does, and hey, you know what? We happy to see Dave actually taking a day off. It doesn't happen very often. He's like you, Phillip. He's always working.
He does do a lot of work. Hey, Scotty, it's been a little bit of a rough week, but we managed yesterday to come up with some pretty good numbers. Finishing up yesterday, I mean, the Dow was up a little over 1.5%. to 34,912. That was up $535. NASDAQ was up 1.75%. That was $252. And the S&P 500 was up about 1.7% also, up almost $75. So, man, after Monday, Tuesday, Wednesday's ups and downs, we really appreciated yesterday's close. And it seems to be maybe we're lucky enough it'll follow through today, Scotty.
Okay, great. Yeah, what else do you have for us? It seems like I saw somewhere where it's earnings season, right? A lot of news coming out.
It is earnings season. Before we go to earnings, though, let's just update because this is a pretty big day for some macro stuff, some of the big stuff coming in. So one of the important things we are always looking at is things like retail sales, import prices, those type of things. And those hit today. So we've got retail sales were expected to be down by 0.2%. So we had a really big surprise there because they were actually up 0.7%. Wow. So that was a big swing, really unexpected. Looking at the numbers here. And then the other retail number we really look at is how much is retail without the auto sales, because auto can be a big number. And we expected 0.5% and we got 0.5%. So that was basically in line with expectations. So I think overall retail sales were kind of a surprise. Then the other one we had was import prices. That's what we pay for stuff to get imported here to the United States. And so import prices were expected to be up about 0.5% for September. They were actually up, but not quite to that level. They were up about 0.4%. So that was a little bit better than expected. So we're looking at two numbers that seem to be a little better than what everybody expected. However, we did have one little fly in the ointment when it comes to the New York Empire State Index, and that's a manufacturing index. It was expected to come in at like 26.5 was the number expected. The month before, it was like 34.4. Well, it trailed down significantly in the month of October to 19.8. So that was kind of one of our misses there.
Yeah, what's that all about, Phillip? That's a new one on me. What does that indicate? What's that telling us?
So what it looks at is nobody really understands what it's telling us other than it's a indication of manufacturing output in the state of New York and kind of that region up in the Northeast. Okay. So when manufacturing starts to dwindle, then that's not good. We
Right.
want manufacturing to be up and moving and out, and that could be. I mean, we talk a lot on this show about supply chain issues, and truly, that could be just an indication of that they're having a hard time getting what they need to be able to fulfill their manufacturing. And so it could be a
Right.
supply chain issue that's coming up there. We don't really know from the
Gotcha.
report what those things look like. But so from a macro stuff, which is what Dave always likes to talk about, that's
Uh-huh.
kind of where we're sitting with. We have some good numbers there. And we'll have to watch to see as we get closer and closer to the end of the year, can we continue to see those increases in retail sales? Because that would definitely be good for the retail sector.
Gotcha.
Um, you mentioned earnings season. It is definitely earnings season. Um, and so let's start off with a late comer. Just hit my ticker just a few seconds before you and I started talking. And so I'm not sure what all the numbers look like, but Goldman Sachs reported, and they really hit it out of the ballpark. They were expected to earn about $10, a little over $10 a share. They earned almost $15 a share. A
Wow.
big beat for
Yeah.
them. Revenue was expected to come in at like $11.6 billion. It came in at like 13.6 billion. So, everywhere we look for them, they were seemed to be beating what was expected. And I know if you look at year over year, it was an astonishing increase in their earnings per share. They're getting a pretty good bump this morning, up about 2.5%. Still not up to their 52-week high yet, but they're trying to get there. They're moving in that direction. So good news for Goldman. We had other guys come out that were financial related, and some of them they all pretty much beat. Truist Financial came out. That name still may be hard for people to remember what that is, but that was a
That's
combination
Sunbank,
of
right?
yep,
It used to be
yep,
SunTrust, right?
yep. Used to be SunTrust, and SunTrust
Yep.
merged with Trust Bank and became Truist. Um, they came in 21 cents ahead of expectations at $1.42. Revenue beat also. They had stronger fee income as well as better loan and deposit growth. But they've been bouncing around. I know they're up early. When I looked a few minutes ago, they were actually trading down, and now they've bounced back up about 0.1%. So there's something in the fine print of their report that people aren't really grabbing a hold of. Same with
Gotcha.
PNC Bank. PNC Financial had a great quarter. They beat by about 55 cents a share. Came in at $3.75. Revenue top forecast. They obviously benefited from some loss reserves that they were able to free up, which helped them. And they closed on they've integrated with another bank that they bought, and that helped them. Now, earlier this morning, they were actually trading up about 1.3%, but they have I don't know. There must be something in the report people aren't liking, because they're trading down right now about 1.2%. So and it could be they're getting really they're right up against their 52-week high. So it could just be some profit taking also, Scotty.
Gotcha. Sure. Okay. All right.
So
What's next on the list there, Phillip?
well, I think I'm trying to look see if is that all my banks. I think that's all the banks and financials we've got. So we got a couple others out there that we can talk about. There's one called Pearson. It took me a little while to figure out what that is, but they do a lot of educational materials
Uh-huh.
for higher education and that type of thing. And so they didn't have a good quarter. They say their sales have fallen by 7% in the higher education realm of stuff. However, they maintain that they're going to still be able to hit their full year guidance, which is good. They say because of the community colleges are increasing their enrollment, which should help them. But they are taking it on the chin this morning. Now they are traded in London, so they're a London traded company. So they're really their stock exchange is actually open right now, and they're trading down about 12% right now.
Oh wow, yeah,
Yeah,
okay.
yeah, they're getting beat up pretty good. And then an old staple that actually used to be the company that led off earnings season, and that was Alcoa. The metals, aluminum producing company. They came in at $2.05 a share, better than the $1.80 that was expected. Revenue was better than expected, as well as they're seeing a lot higher prices for aluminum, which is good.
Sure.
They right now, they got a nice little jump here. They're up almost 6.5%, Scotty.
Wow.
Yeah, and they're less than $1 from their 52-week high right now. So some good news there across the board for Alcoa. And I think that's probably the last one I have as far as earnings, but I did want to mention this before we get off the air. Moderna. They didn't report earnings, but they've been in the news.
Right.
The FDA approved for emergency purposes their booster for those 65 years and older, or who have immune system issues, or work in a highly contagious area, medical and that kind of stuff, to get the booster. And that has that's really helping Moderna this morning. They're trading up about 2%.
Right.
So so that's kind of where we're sitting for today, Scotty. As we get ready to head into the weekend, we've got the indexes all heading to the upside. The Dow is up almost 0.7%. That's $233. The S&P 500 is up 0.5%. That's $22. NASDAQ's up almost 0.4%, about $56. And the Russell 2000 is really giving them a run for their money, up 1.3%, or about $29 this morning. So everything's looking good on that front. Switching gears and looking at the commodity side of things, Scotty, we've got silver trading down again 1.1%, gold's heading down about 1.5%, and then we look at crude oil. It's going the wrong direction still, Scotty. I hate to tell you, but
boy.
It's up 0.7% to $81.89 a barrel for a barrel of oil. So it continues to be bouncing between that 80 and 82 right now.
Right. Hey, also, I was going to ask you, because I keep hearing little snippets of this here and there. Is inflation something we need to start worrying about? Are you concerned about inflation in general?
We are. Inflation is definitely picking up. The question becomes how much of it is kind of transitory, meaning how much of it is being caused because of the supply chain issues, supply and demand. Right. People are willing to pay more just to get it, and versus how much of it is truly an economical increase in inflation. And we don't know that yet, because we're still dealing with the supply chain issue. And a couple of articles I've read really are not encouraging. They're really thinking that it's going to be maybe the end of 2022 before we see some resolution to our supply chain issues, which is a lot longer than what a lot of people were originally saying. So that means that the whole supply chain inflationary thing is going to be with us for a while.
Yeah. All right, Phillip. Well, what else you got for us this morning?
I think that pretty much finishes up, other than just to remind people that the volatility that we're seeing out there is, I don't believe it's going to go away. And so if you are 5 years or less from retirement, it becomes more and more important that you understand your risk. And that's why we developed our trademarked core retirement design, to be able to process through that, to make sure we don't have too much risk, make sure we're going to be able to create the income you're going to need, so you got the retirement you always dreamed of. And give us a call at 863-382-0037. Check out our website at statlerfinancial.com. Join us this weekend for the Statler Financial Radio Show, 6 a.m. on Saturday. We're going to miss noon on Saturday because of the Gator game. And then Sunday at 10 o'clock on Highlands News Talk 730, and now on 95.3 FM.
All right. Hey, always a pleasure. Good talking to you, Phillip. Have a wonderful weekend.
All right, man. It's good talking to you too, Scotty.
All right, you betcha. There's Phillip at Statler Financial Services in Sebring. From the pitch.
Hey, folks. Again, I want to thank you for joining us this week. I hope it's been a great one. Looking forward to the weekend. Me too. Until Monday. Actually, not till Monday. I forgot. I'm out. I have a meeting out of town, so I will be gone until Thursday. I'll be back with you Thursday morning, bright and early. Don't miss us then. Take care. Bye now.